Buried by all the recent news about Fed rate cuts, there was a notable dividend hike that income investors may have missed. Supermarket grocer Kroger announced a nice double-digit increase to its payout. The increase gives Kroger a dividend that's well beyond the average dividend yield of stocks in the S&P 500. Should dividend investors consider Kroger? Well, let's take a look. Kroger recently announced it's increasing the dividend by 14%. This means Kroger's quarterly dividend is rising from 14 cents to 16 cents per quarter, or 64 cents per year. In the recent press release, Kroger CEO Rodney McMullen stated that, and I quote, Kroger's 14% dividend increase underscores our board of directors' confidence in the momentum we are building in the second year of Restock Kroger and our ability to deliver strong free cash flow. This dividend increase gives Kroger a strong dividend yield of 3%, easily besting the average dividend yield of stocks in the S&P 500, which is about 1.9%. While a substantial dividend yield is nice for investors looking for income, investors want dividend growth too. In that regard, Kroger's dividend has increased at an annual rate of 13% since the dividend was reinstated in 2006. In addition, the company has raised its dividend for 13 straight years. Moreover, Kroger's underlying business looks like it can easily support dividend growth. For example, in the trailing 12 months, the company brought in an impressive $954 million in free cash flow, which is cash from operations less capital expenditures. Yet, it paid out just $440 million in dividends. This payout is less than one half of the free cash flow and will help Kroger during any potential downturn. On the flip side is that Kroger has slow growth. Sales only increased 2% in Kroger's most recent quarter when adjusted to exclude fuel sales and the impact of selling its convenience store business unit. Additionally, Kroger's non-GAAP or adjusted earnings per share decreased slightly from 73 cents to 72 cents per share during the same period. However, same-store sales are on the rise, increasing 1.5% in the first quarter of 2019. In addition, digital sales were up 42% year over year, highlighting the momentum of the company's Restock Kroger transformation plan. Further, Kroger expects full year 2019 same store sales to rise 2% to 2.5%. So, let's now go take a look at our charts. And we're looking at the 20-year monthly chart on the Kroger Company, and the symbol is KR. For disclosure purposes, I do not hold any shares of Kroger Company at this time. And simply looking at the price chart, since, say, the bottom there in 2009, 2010, it's been a relatively decent upward trend through here. We're at currently $21.52. We did have a high in late 2015 at that point there, came down in mid 2017 to that point. It had a rebound up to this level in mid 2018, but it has been coming down since then. Again, we're at this level here. Regardless, though, let me show you the MAC. The MAC here shows the maximum negativity here in mid late 2017, and since then we've had some good improvement. Now we're still under the zero line. However, it looks like it wants to try to do a basing here. At least the fast line wants to do some basing here. The important point is that even though the MAC is perhaps negative compared to the rest of the history of the MAC itself, the price chart shows that the current levels are well above the levels they were back in, say, 2009, 2010. So even though that MAC looks ugly, it is quite improved, and that's what I like. That improvement also shows here in the histogram with this maximum negativity there, but the improvement up to that level. into the price rate of change. The same thing. The bottom there in late 2017 with now the interim bottom here looks like it wants to base and it looks like the fast line wants to move through the slow line. That's a good sign. Relative strength is a moderate weak 32.99, but that also shows improvement and it looks like it wants to head on up to that midline or 50 line. Moving on down to the stochastics, the same sort of thing. Improvement here in the stochastics with the fast line just curving, looking like it wants to do some basing, some bottoming at this level here in this area. I don't know how long that's going to take, but just based on the prior low here in mid 2017, it may not take too long, maybe a few months or so. Volume looks fine. And then the Williams also looks fine with that maximum negativity in this area here. We came on down. We're not quite all the way down to negative 100. And so I think there is a little bit of improvement, but this looks like it wants to head on up. It's definitely in that oversold territory. And I think that we're going to have a rebound coming soon. So back up here to the price chart, again, the thing that I like is this move from the top all the way down here to late 2017. We're testing that here in the current time frame, and I think it's going to be a successful test. And if so, then it's going to be basing and then heading on up in not too long. I'd say a couple of months, maybe a couple of quarters at the absolute longest from this time frame here. So, in my humble opinion, keep Kroger on your watch list. And for today, that's ChewDog Charts. Thank you.